You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out once again with the option block, your bi-weekly source for all things options related, a little bit of options wit, some wisdom, some analysis, a whole bunch of unusual activity, a bunch of your questions like we'll get to today, and a whole bunch of other stuff. Mix them all together, you get the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on the aforementioned network. A lot of ways for you guys to mainline our content. It's always amazing to me, even though we've been around forever. Still get people hitting us up all the time. We love it. We just discovered it. It's new to us. So, hey, we love all you new folks out there, too. You guys can get it a bunch of different ways. The website or the app, probably the best way to go deep into the primordial ooze. You want to go really far back. If you're new to it, maybe you want to discover it for the first time, you really go back in there. That's the easiest place to go back. If you want to subscribe and get all the new stuff going forward, of course, iTunes, TuneIn, Pocket Cast, my own personal favorite, but to each their own out there. Make sure you probably grab the network feed because that gives you everything. You can subscribe to individual shows as well. We encourage that, but the main network gives you everything. Set it once and forget it, and you'll get everything. Trust me, there's a lot there. So you'll have your fill of options content, and of course, you can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. All right, and however you listen, live after the fact, hit us up. Questions, comments, insights, all that good stuff. We do, yes, we do like to hear from you guys. And let's spin the old all-star panel wheel, see who we got joining us, mixing things up today a little bit. First off, let's go out to perhaps a Costco or a playground or a train near us where we are joined ever on the go by the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com by way of Carmeline Capital. Mr. Meatball, welcome back to the show, sir.
Hey, it's good to be here. I'm happy to be here. I'm enjoying this beautiful summer day and sitting out back of my yard, reacting to the crazy non-craziness of the market today.
It's a good way to describe it. Crazy non-craziness. I wouldn't know about the weather. I've been stuck here in the bowels of the studio all day, but I'll go out after the show, and I'm sure it will be lovely. And joining us from just a little bit farther afield, actually closer to where you are, I believe, because I do believe he is beaming in from not that far away. We are joined by Lex Luthringhausen of TradeHawk. Actually, my TradeHawk, powered by Optionize. If you want to be technical about it, Lex, welcome back to the show.
Thank you, Mark. Thanks. I don't have the pleasure of being outside in my backyard in the sun. I'm chained to this desk, just working all the time. But I'm so happy to be here. Thank you very much for including me.
No problem. Good to have you back. You were on about 3 or 4 months ago or so on the show, but we like to check in, see how things are going. So maybe before we even get into the trading block, really quickly, kind of give us an update. I know you guys are always cranking away, working on, putting out some new cool features, spinning up some new cool stuff for people over there. So what's new over there at My TradeHawk since the last time you and I chatted?
Yeah, so great. I was chatting with you earlier today about it. We released paper trading, and what that means is now you can demo the system with a paper trading account. You just need to sign up and check that box. When you do that, you get $100,000 of paper money to mess around with. So it's a great way to learn the system, practice with the functionality. You do not have to have an account at Trade-A-Year to do that, so it's another great feature to get used to what we have. In addition, we just released Room Chat this week, Monday. If you're part of an educator group and the educator has this feature, you can follow the educator's posted trades and commentary within TradeHawk, one-click trading if you choose to do so. So a couple cool features that have just come out.
If only we knew some educators who had like a trading chat room and wanted to talk about stuff. If only we knew such people, Lex, then we would be all set. Instead, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show where we break it down for you. What was going on, what was catching our eye, what was lighting up our own personal tapes. I think Mark summed it up well there at the top of the show there. Kind of weird, I forgot what exactly you just said. Weird unweirdness, if I could coin a phrase for you over there or not. But it was kind of a weird disassociation going on over there with everything kind of doing its own thing today. We saw the S&P, kind of the Goldilocks of the bunch, pretty much unched on the day. We got the Dow up nearly 0.5%, so deciding it likes what's going on today. Tech-heavy NASDAQ saying, no, sir, we're going to sell off today. It was off, I believe, a full percentage point at one point, off about 0.75% to end the day out here. So kind of a weird story, different story where you look, depending on large caps, tech-heavy, other types of names they're focusing on, all kind of telling different stories today. And all this kind of mixed bag lent itself to a little bit of an inhale back after they had been drubbing ye old VIX cash. We got down to an 11 handle. I believe 11.22 was our entry. Yes, 11.22 back yesterday. So actually, no, that was today. So about a handle lower than where we ended up settling out, right around 12.29 or so. Net on the day up about 65 cents, or not cents, because we all know it's not cents, but we'll pretend like it is for today. 0.65. How about that? Easy for me to say today. All right. And Lex, kind of a weird day, so you get the pride of place as our guest for being the first to kind of parse it. What kind of caught your eye out there in today's activity? What was going on, and what was lighting it up over there at my TradeHawk today?
Yeah, Kyle, I'm not sure it's market related, but there's a lot of interest in trading BABA today and trading Tesla. Those are the two that really stand out to me that I noticed a lot of chatter about, I suppose.
Well, Tesla in particular, they Musk came out and said, "Oh no, we'll be at 5,000 a month by next month or something like that," and meanwhile, every other analyst is saying it's going to be next year. But, for now, if Elon Musk says it, people still believe him. And Tesla got a bid. BABA was down nicely along with a lot of the other big tech names. If you were a semiconductor or a big tech name, you got slammed. The Dow was really saved by McDonald's, which announced a big restructuring and was up $6. So nice day for the McDonald's people. Not such a nice day for the balance of the overall market, but just a kind of a weird one. Like I said, you're right. We got a nice run up on VIX, a little over 12, and the NASDAQ down 0.8, while we had the Dow on the back of McDonald's and a couple of small names up big. So just kind of weirdness abounds. I will point out that oil caught a little bit of a bit as well.
Yes, oil getting a little bit of a bump. Lex broke down kind of what he was seeing on his platform. Mark, what were the crazies out there, the pit chatters out there slinging today? Were they? I know they like a Tesla or two every now and then. What was catching their eye out there today?
We spent a bunch of time looking at McDonald's. And actually, Qualcomm is really interesting because of the ZTE deal that got announced today. ZTE is a customer of Qualcomm, and ZTE getting the right to stay in business likely smooths the way for the QCOM NXP deal. There's also rumors that there may be some sort of Apple-Qualcomm compromise coming up in the next few weeks. So we were playing around with that one, and looking at the financials a little bit and some things like that. It was really kind of interesting.
Can you touch on Apple on the day when Uncle Mike is on assignment? He'll be very sad. Somewhere, wherever he is right now, there's a single tear running down his face. As a few times we talk about Apple, he's not here, even though he's not quite the Apple devotee that he once was. Lex, you kind of mentioned Tesla and Baba lighting it up. Are those kind of regular stalwarts? I'm going to guess maybe one of those probably is over there at My Trade Hawk, or are there other names that you usually see on your tape? I know every kind of firm attracts a different audience, a different clientele. What is it that's over there in your guys' kind of collective top 5 every day? What are people trading all the time over there at My Trade Hawk?
Let's see, top 5. Amazon still is a big trader. Now, I got to be honest. I don't know how people trade that stock, being as big a price it is, and the options are such big boy options. I guess if you look at them though, the liquidity is pretty good for a stock that is that big of a stock and moves around that much. But I'll tell you, they still trade a lot of Amazon. Booking, another big one. Costco was busy today. I'm looking again at Netflix. So those big names that like to move around a lot, we tend to see a lot of interest in those stocks. Facebook got a little slam today as well, so a little action there.
Yes, a lot of the shall we say the stalwarts. Amazon, you're right, it's a pricey one, but it does get a lot of love, a lot of attention out there. Speaking of getting attention, a lot of you guys hitting us up on this, so it's kind of something. It seems top of mind for a lot of people out there, and it's not. It's kind of an options-related tale, and it kind of isn't. It's a little bit of both. This is, of course, the big brouhaha that Buffett and Mr. Diamond kicked up over there on CNBC, I believe, today when they went out there once again, kind of hitting back at quarterly earnings reports, saying they're not a fan of these things. They say when companies get where they're living by so-called making the numbers, they do a lot of things that are counter to the long-term interests of the business. It can put a CEO or a company in a position where management feels obligated to deliver earnings and therefore may do things they wouldn't otherwise have done. David John wanted to say this: their quarterly earnings are a function of weather, commodity prices, volumes, competitor pricing, etc. Things you don't really control as a CEO. Sometimes you're just like a cork in the ocean, but do the right thing anyway, and you're going to be fine in the long run. This is kind of interesting. It's kind of a perennial push-pull we see on the street, where the street very much obviously a short-term, what have you done for me lately kind of focus, where we see a lot of others on maybe the fundamental side or on the activist investor side or many other types of areas that say maybe we should focus on things that are more beneficial, I should say, to the long-term health of a company, which is kind of interesting. And the people arguing against this, saying that these types of events reduce volatility, which I'm not quite sure really there's a lot of data to back that up. But we know the earnings events themselves are highly volatile, and they inject a lot of volatility into the marketplace. So if you take those out, it might be an interesting thing for a lot of options traders. Now they're saying that McKinsey did a study. This is an old study, 2006. Not much data on this, surprisingly, listeners, saying that quarterly guidance didn't reduce volatility and it didn't affect valuation multiples, which is interesting as well. I'd like to see maybe an updated study on that. But, Mark and Lex, this is kind of interesting thing. Our industry as a whole kind of feeds off a lot of this, I guess you can call it renewed vigor, renewed excitement that comes every season. When earnings season comes around, all of a sudden it's kind of like a mega, NCAA tournament. Everyone's looking at all these different names. They're all kind of playing off, everything's popping off on a different day. So if you're a schizophrenic, typical ADD type trader, you have something else to focus on every day, which a lot of people find interesting. Even if you're not trading it, you get a lot of activity, a lot of interest in these different names, which could overall be beneficial. So maybe this is kind of an interesting bifurcated question, because on the one hand, maybe it is better for the long term to stop focusing on these weird, aberrant announcements that drive so much of the value of the stock, and instead focus on maybe a more smooth type curve. But on the other hand, maybe for options, this is maybe a bad thing. I don't know, Lex. You're in the day-to-day transaction business. What are your thoughts on this debate? Are you kind of pro the system we have now, which does tend to drive a fair amount of options volume, or do you think maybe something else can fit in its place?
I don't know. I think I agree with the statement that the quarterly earnings puts a stir around the options traders, right? And we have a decent amount of folks who really focus on the earnings cycle, the quarterly earnings cycle. So for short-term options people, they love that, right? They love the excitement. Volatility gets just crazy high before an earnings announcement. So there's all kinds of activity to think about and trade relative to options. You take that out of the equation. Great for a longer-term investor, the guys who are buy and hold type folks. They're certainly important too. So, I think for option guys, I think they'd love to have the uncertainty 4 times a year. My guess is that if they could have it 6 times a year, they'd choose 6, right? So I think the option guys tend to like the earnings plays.
Yeah, that tends to be the case. Mark, you concur with that? Maybe this is a case of maybe what's good for one isn't necessarily good for the other?
Yeah, I think it's interesting how many people love earnings and how little I do. It's probably my least favorite time to actually trade because, I like trading around them. I don't like trading into them. So the period around them is just wonderful to trade. It's the actual event that I hate. It's a huge pain in the butt, and there's never any semblance of which way the underlying's moving or why. All you end up, but the stuff around it, the front of it, behind it, after it, is some of my absolute favorite time to trade.
Yeah, so that would clearly go away if we have a much more smooth. And this information's got to get out there somehow, right? So it's going to get out there. Maybe it won't be as just a binary event like it is now. Maybe it'll be a smoother release to the marketplace. Maybe in long term that could be good. Yeah, I mean, I know for our audience, they love those events, even though we caution you guys all the time. Maybe don't trade the event itself, but as Mark alluded to, maybe you trade around it. There's a lot of opportunities that are presented by earnings, even if you're not trading the event itself. So as a whole, it's a good transactional thing. I wonder what the options industry would say if we did a poll. I kind of have a feeling they probably would lean the way Lex was saying, but it might be an interesting conversation next time I do my big roundtables like an OIC or other things like that. Really quickly before we go on into the odd block as well. Speaking of options interest, this kind of data came across our desk the other day. We posted something on the website about it recently. It's kind of fun. You guys you can parse search data a lot of interesting ways. And one of the ways you can do it is by looking at interesting, terms that are relevant to our space and seeing what the interest has been over time. And Google Trends makes it very easy to do just that. So we were playing around with that earlier in the week, and we're looking at some very common search terms for options, like options trading. Go figure, kind of the most basic one out there. And when you pull that up on Google Trends, the data is not exactly encouraging. The data goes back to about January of 2004, which is kind of the primordial ooze days of Google search as well. And if you look at that data, they rank it a little bit differently, where they say like kind of the high point of the chart is ranked as 100, and the rest is kind of viewed as kind of percentages of that high point in terms of overall interest. And the 100 is definitely back in the early days, back on January 1st, 2004. We peaked, got close to it again a few times, like around 2008, mid 2008. I wonder what was going on then. I have no idea what could have driven options interest then. But for the rest of that time, from January 2004 till now, it's been a kind of long, slow, steady decline. In fact, overall search interest in that particular term is roughly half, about 51%, what it was in 2004, which is an interesting, somewhat head-scratching result, because anyone who looks at the actual material practice of options trading, which is options volume, broker darts, all these things, those have all been pretty much on that same period. The graph looks almost exactly the opposite. They shoot straight up. So it is a weird thing that people would be searching a lot less for this while simultaneously clearly trading a lot more and a lot more volume and a lot more contracts. I think at the end of the day, brokers and people exchanges would certainly love the latter rather than the former, because that actually pays them. But still, it is a somewhat surprising result. Of course, when you mix in some more generic terms, I thought we'd dial it back a little bit and just go more generic. Let's go straight up options. Obviously, options can cover a lot of things, options for surgery, options to invade Iraq, whatever the heck it is. That can include a lot of things. But in general, the most generic of search terms, options, that interest has held relatively steady since 2004. It hasn't really changed that much. So again, that's a more generic term, so you can't really read too much into that. But still interesting. I think we're going to do a lot more analysis and go even deeper down the rabbit hole. It should be kind of fun. But still kind of interesting. Lex, you're in the transactional business over there. What are your thoughts on kind of the conflicting nature of the Google data on one hand versus what we've seen in the actual space on the other?
Yeah, I mean, it's hard to say because I think the options trader / investor has with all the the educators out there and all the education, they've probably specialized their search a little more. So they go into there's so much ETF business now. There's so many different things out there that they can really go after. So maybe the generic options part isn't as enticing anymore. But volume, as you said, it's pretty solid, right? And I think it's one of the brokerage industry's greatest drivers of volume and growth for their businesses. Everyone looks to option business nowadays, and there's a lot of stock traders, but man, options are just killing it. So I think I don't know. I think it could be it's very specific searches. I don't know.
Yeah, obviously the devil's in the details here when you look at the terms, and maybe the audience has grown and changed and morphed, and maybe people are looking, they're grown so sophisticated now, they're not just searching for options trading anymore. That's too basic. They're searching for specific things like iron condors or things. So we'll do some more parsing of that data, but it still is a little bit strange. Mark, any thoughts on this and kind of the polar opposites between the Google data and then what we're seeing in the actual options volume?
Well, I think what's kind of interesting is that, one, I think people don't need to search for that as much. They know where to go. A lot of content is being delivered on the platforms themselves. A lot of it is coming directly from different email and things like that. In addition, I think that part of the volume is that maybe there's not a lot of growth in number of users using options, but the amount of option trading that's coming from the same audience is growing substantially, and that is another major piece of the pie, I believe.
Yeah, I think there's a lot to parse here, and I want to sink my teeth into more of it. Unfortunately, we got to sink our teeth into some odd trading, so it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the wondrous. Lex, you mentioned Tesla before. We kick off our Odd Block every show with Tesla because so much fun stuff happens, including our old friends, the gift that keeps on giving, these mystery / catastrophe / whatever the heck you want to call them puts out here. We're just on fire today, tearing it up yet again. Yes, I'm talking the Jan 2019 50 puts. Tesla, by the way, off about a little over 1%, about 3.5 handles. So a comparatively mild day for this name out here, closing right around 316. That clearly today's price action, though, was driving some action and some interest in these crazy out of the money 50 puts in January of next year, Jan 2019. Nearly 7,000 hitting the tape, listeners. So a total 68.90. These things trading 87 at 97 cents to close out the day. There's 57,000, over 57,000 open on this strike. So we're talking over 10% of the OI going up today. I'm really interested to see if exactly maybe someone's closing out there, maybe someone deciding discretion the better part of valor on these, or they're doubling down for more. They liked them at $3. They gotta love them at 87 cents, right? So this is one of the more active days we've seen in a while, ever since that article came out a few months back. Certainly a lot of love for these bad boys. I'm looking forward again to see how the OI reflects tomorrow. Meanwhile, I'll move on to a little bit longer term dark downside there. Jan 2020 50 puts doing a fair amount themselves as well, about 621. OI a lot less here, about 18,000, so still decent paper out here. So long-term out-of-the-money puts, the Jan 2020 pars, by the way, do nearly 400 contracts, about 14,000 open there. So long-term out-of-the-money puts in Jan continue to dominate the narrative out here in Tesla land. Lex, I'm going to go out on a limb and say your customers probably aren't trading these, but I don't know. Have you noticed any aberrant interest in crazy out-of-the-money puts in Tesla in your clientele recently?
No, I would say they're not. They are definitely not out that far. No, not at all. They're within, I would say, 120 days max, typically.
All near-term Tesla paper. Just like I thought. If you want near term, I like this next one. Next one's a little bit farther out as well. This is Banco Bradesco. This is an ADR, ticker symbol BBD, closing today about $7, off about 30 odd cents, or almost 5% on the day. It's something that does about 3,200 contracts a day, so not bad for an odd block candidate. Today doing 47,000, so a little bit more than that. 33-1 puts over calls out here. And it's interesting to note, we first started watching some funky puts first caught our eye to the tune of the Jan 2019 6 puts going up. Or actually, the first ones you noticed were the 5 puts actually in Jan 2020, going up 20,000 times for 54 cents. And it seemed like that was all she wrote out there. But then later on in the day, we see 20,000 more, this time of the Jan 2019 6 puts going up out here instead, going up for, looks like about 50. Well, that's for the 2020s there. Why are the systems lagging on me here? Let's just go to the chart instead. Looks like a bit of a spread. No OI to speak of on either strike, so not the traditional roll that we'd usually see. Even still, rolling the Jan 2019 6s would be an interesting choice this far out, but we've seen stranger things out there. Speaking of this far out, let's see what's going on out here in good old BBD, what it's been up to over the past year. A year ago is pretty much exactly where it is right now, about a little bit higher, about $1 higher. It was about $8 about a year ago. Over time, it got as high as about 12 to 13 back in late January, and it's kind of been on a downward trajectory ever since, and some of the recent developments out there weighing on the name yet again. So $7 is pretty much at its low, 52-week low right now. Mr. Meatball, like I said, it started off looking like this was a straight-up put trade, and then as the day went on, it looks like actually we see a little bit of each, a little bit of the Jan 2019 6s and the Jan 2025 puts, both opening and doing so for size. Any takes here, sir?
My guess is this is a hedge. The suckers had kind of a rough go of it over the last year, and 2 earnings cycles ago it was 12. It's now 7. I could see a scenario where someone is a little concerned because it appears to be sitting at right about a 2-year low. So my guess is that somebody's setting up some kind of hedge.
Certainly has that feel to it out here. Let's just check here really quickly for this second leg here on the puts. Yeah, they went up. The second leg went up, tied a little bit later here, courtesy of our friends over there at the Land of Alerting of Trades. A good place to go if you want to see what went up on the second leg over there. We got to keep rolling, though, to July in particular. This one is IP. This is International Paper Company. Closing today, 58.61, off about 40 odd cents, so about 0.6%. This is a name that does about 6,000 contracts a day. Today, doing about 22,500, about 27-1 calls over puts out here. Let's see if we can find our bad. This is not going as far out this time. We're just going out to good old July. And in particular, looks like some straight up upside love fest here in international paper. In particular, was the July 62 halves going up for 58 cents, 10,456 times. Total of about 12,000 and change going up on this strike. Looks like they were pretty close to gobbling up the offer there. So seems like opening buy, definitely opening, because there's no OI to speak of on this strike, doing about 1100. And so also worth noting, there were about 6,000 of the 57 halves going up today too. So perhaps bit of 1x2 action. Worth noting as well, 17,000 of the 57 halves open on that strike as well. So perhaps, since they are about $1 in the money, paper playing with a little bit of house money here, taking off 6,000 to pick up 12,000 more out here on this strike. Usually when we see a ratio like this where they're rolling to the upside, that usually, and they have a double ratio on the upside, usually a good sign that they're playing with house money. Let's see when these 57 halves were opened, and that will tell us part of the story. They were opened back on the 15th of May, so not that long, when they were trading about between 45 and 60 odd cents. So yeah, I think it's fair to say that they're sitting on some money. This thing's closing today right around 250. So roughly a 5x winner, if that is indeed the case. And so it looks like they're taking some of it off, not all, but some back on that trade. That looks like about 11,000 traded back on. Yeah, about almost 12,000 traded on the 15th. So if that's the case, they still got about another 6,000 to go. Maybe they're waiting for a little bit more of a run to take the rest off. Either way, looks like someone's still not done with their bullish love out here in IP. Keeping that bullish upside party running as we pull up the chart here for the past year. This thing about a year ago was trading right around $54, 53 and a half. Got as high as, 67 back in late January or so, and then kind of just dropped off a cliff again back to 50. So it's kind of been vacillating all over the place. Right now, it's kind of on a little bit of a near-term run. Mr. Meatball, looks like someone taking some house money off the table and then coming back to play for more size on a higher out-of-the-money strike. A good sign that someone's sitting on some cash. Would you concur, sir?
I would agree wholeheartedly. I think that that's exactly what happened here. And, smart customers are usually, I like paying attention to smart customers. So take note here, folks.
Yeah, worked out once. He's keeping the party alive and sitting on some cash to boot. Maybe worth paying attention to again. Lex, I'm going to go out on a limb and say International Paper, probably not a huge driver of a paper over there at My Trade Hawk, or am I perhaps mistaken? Is this one of your favorites over there?
That's probably safe. I mean, I agree with both of you guys. This seems like exactly what you've both said. This guy's got house money. He's rolling it up, parlaying it into his next adventure, and you can see the chart. Up at, I think you said, Mark, 67. So he's got nice profit in this baby, and he's gonna, take some of it and roll it again. So that's good. Good play for this person or entity.
We'll see if this last name can be as fortunate. We're going to wrap things up here with Analog Devices Inc., ticker symbol ADI, closing today right around 102. Pretty much unched on the day. It's a name that does about 3,100 contracts a day. Today doing about 14,000, so a little bit more than normal. About 9-to-1 calls over puts out here. And if Jan was too far, but that July stuff was a little bit too near term for you, if you're more of a Goldilocks kind of guy, well, we got you covered here with some SEP paper. In particular, it was the SEP 110 calls, lighting it up 10,000 times for not quite $2, a little bit shy of $2 here. Paper coming in way, looks like below the bid on these bad boys. When they went up at the time, these went out $1.70 at $1.80. So they came for that strike in the interim. Total of about 1,000 more piling, about 11,000 going up total on the day over here. Worth noting, it's all opening. Only about 300 contracts open on that strike. Again, these are 110, so they're a wee bit out of the money. Has all the whiff, all the air of a little bit of yield harvesting, perhaps, on this name. If this is indeed, whenever they go up out of print like this, or they go up below extremes, you always kind of got to wonder exactly what went up out there. But it seems like one up has all the spidey sense feels of a little bit of some yield harvesting out here. Let's go back and look and see how his strike selection is lining up. This thing was about a year ago. It's trading about $80. So it's been on quite the tear of late. In fact, right now it's at pretty much its 52-week high right around 102. So Mr. Meatball, it seems like someone thinks the party is going to keep on rolling out here in ADI and doesn't mind writing some calls to the upside in case that does come to pass. Sir, is that your take as well?
That's what it appears to be. ADI's had an interesting couple of days here, and I'm going to say that that's probably the case. I mean, this stock is at a 2-year high. The only thing I'd say is the vol is really, 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 really cheap. So, I like, this is definitely an interesting play. This is one I'm going to play with tomorrow, actually.
That's why we do the show. 3 reallys and cheap when it comes to Mark. So the whole show really is just to give trading ideas for Mark. So that's why we do it. Meanwhile, we got to keep on rolling into it's Thursday. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Lex, I know you got to actually hop off in a little bit here, but before you go, I wanted to give you a chance to play on some of our mail block palooza here this week. In particular, we like asking our audience questions. They ask us questions all the time, too. We like asking them questions as well. Like this week, we asked you guys, going back to that topic we were discussing before, of the Google Trends data. It's full of interesting, some might say surprising data out there, but when you analyze some basic option search terms, you uncover some interesting things. This brings us to this week's question. We dialed it back. Remember, we went pure generic. We just went straight up options, not options trading or, derivatives or iron condor or anything like that. Just straight up options. We asked you guys, and Google breaks this data down by a lot of different ways, including what they call subregion, which is effectively state. And then they rank them by overall level of interest. So it brings us an interesting question. Which subregion, aka state, do you think Google is currently ranking for number 1 overall options interest? We gave you guys 4 choices. We gave you Illinois, California, New York, and Maine. Lex, since you're our guest, I'll give you pride of place, sir. Where do you think is number 1, at least from Google's say-so, in terms of overall options interest?
Okay, so I'm going to make a guess. I didn't look this one up. I'm going to say Illinois, and there's only one reason. It's kind of the birthplace of derivatives with the SIBO when they started that way back when. So it could be the wrong answer, but I'm just going to say Illinois, even though California has a much bigger population. So
remember, in the population game, could actually come back to haunt it, because remember, Google, this is not overall volume of queries, what most people would think it is. It's actually, Google breaks it down as kind of a percentage based according to population. So overall, large population may actually come back to haunt it. Mr. Meatball, what say you, sir?
So it's the percentage of the populace that's interested, is what you're saying.
Yes, pretty much. So which area expressed the greatest percentage of interest?
Yeah, so it's adjusted for, I'm going to go on a limb, and I'm going to say, just because Andrew by himself could maybe move all of Maine, I'm going to say Maine.
Wow.
Very interesting. I cannot reveal the answer yet, at least publicly. I'll put it in the show chat here for you guys to see. But I can't reveal the answer publicly because the poll is still running. But so far, I can't reveal what you guys are voting for. And it's kind of a hot and heavy race between the two you might usually expect. 35% saying New York, 32% saying Maine, 22% saying, 32% saying Illinois, 22% saying California, only 11% saying Maine here. All right, and I know, Lex, you have to disembark before the end of the show. So really quickly before you run, sir, give us a quick hit. What are you guys working on? What's coming down the pike that we can expect from My Trade Hawk in the coming months? And if people are interested, they want to learn more about the platform, what it is you guys do, where should they go? What should they do?
Yep. So to answer that second question first, www.mytradehawk.com. You'll find all kinds of information there. Signups, paper trade signups, all that kind of good stuff, videos, you name it. I highly recommend, I tell everyone this, You can go to this site and you can do an online tour with me, and I can take you through a private one-on-one tour of the system. So that's on the website as well. You just sign up for that and come do that. It's a great way to learn the system. I call it jump starting. So you hop right in and you get to absorb quickly. Some of the new things, we are just about ready to release our conditional strategy order suite. What does that mean? That means there will be lots of cool automation with that you'll be able to set as a user to manage your portfolio. So triggers, brackets, cool triggers with trailers, all that kind of stuff. You know, I want to trigger an order based on a different product even. You can do that, those type of things as well. So pretty cool stuff coming up.
That is cool. A lot of brokers have trouble with that functionality. You know, they don't let you do basic stuff. You know, the basic type of conditional orders. So I'm glad to hear that you have that. Well, Lex, I'm glad we can get you on. Have a nice little check-in on all things My Trade Hawk. Hope our listeners check it out over there as well. And of course, we'll look forward to having you back on the show in the near future. Lex, yeah, by the way, follow him, listeners. He's over there. It's very simple to find on Twitter, @MyTradeHawk. Give the man a follow over there. Give the firm a follow. See what you can keep an eye on all these new features that they have rolling out. And Lex, look forward to talking to you again really soon.
Okay, thanks, guys. Great talking to you guys. I have to run.
Take care. All right, Mark, now that he's gone, we can get into the meat of the show, the nitty-gritty here of the show. But yeah, following up on last week's poll, we asked you guys, which product did you guys think had the highest 30-day implied volatility? It was a very contentious issue. A lot of people chiming in. We asked you, hey, no cheating, no looking at your broker's decks, or just use your gut. What does your gut tell you? We gave you 4 choices: Tesla, VIX, Bitcoin, or the Russell 2000. You can find the answers for a lot of these just what we talk about on our shows all the time. You know, we talk about, the VIX of Russell. We talk about, which is a pretty close approximation to the 30-day out there. You know, we talk about VVIX a lot, which is a pretty close approximation to pretty much your 30-day implied or close to it for VIX out there. And then, of course, Tesla we talked about before, and also Bitcoin. Bitcoin's kind of the wild card there. But when you look at the actual math, in fact, we broke it down on TWIFO the other day on the show. The actual volatility of Bitcoin is lower than you'd think. You know, it's usually somewhere in like the 60-odd range. It has spiked up to around 100 or so, but usually it's in that 60-odd range. So interesting stuff. So if you look at that compared to where VVIX and volatility is right now, it is VIX. I know, Mark, I know you were vacillating between Bitcoin and VIX. There you go. The answer was VIX, at least for the time being.
All right. Well, I was right then. Go me.
Yes, exactly. You were close. You had a 50-50 guess, and one of them turned out to be right. So it worked out pretty well. Some people were saying Tesla and others, which I know that it has that perception. In fact, I should give you the numbers, how it broke down. 35% coming in for Bitcoin. I can see why you might go that way because it has spiked to some crazy levels. But in general, the average kind of involving what's going on out there right now is probably around that. Not where VIX is right now. 34%, so very close. 35 to 34 saying Tesla. I know Tesla has this perception of being uber volatile. In fact, we'll pull up the exact numbers right now, but I believe Tesla was only in the 30-odd range. If I could pull it up quickly enough. Here we go. Tesla, they're actually about 40, low 40s right now. 30-day implied is right about 43. So yeah, it feels very volatile. Certainly trades pretty crazily, but not quite as volatile as perhaps you might think. 21% saying VIX, 10% saying Russell. Russell was leading for a while. Then it kind of fell off. I think people started doing the math and they realized an index probably isn't going to unseat the volatility of another product out there. Let's see what else we got here. We got time for some more. A. Keats. One of these people I was referring to earlier. A lot of these people coming in, which you love, you guys. Hey, he says, or perhaps she's saying, just discovered the radio show and I am absolutely hooked. Great content. Well, thank you, A. Keats. We like you back. And you're clearly a man and or woman of great discerning taste. So glad you like it. Love all the newcomers. Keep the fun rolling. Mr. Rock Lobster isn't here, Mark, but on our last show he was on, let's just say he had some problems with Asian options. He was not a fan or even really didn't know what they were. And so Till, I think, is giving him a hard time. Too bad Rock Lobster's in here. His ears must be burning wherever he is. Till's saying, I'm looking forward to the Rock Lobster's ongoing webinar series on Asian options. So there you go, Mark. I think I teased Andrew about that myself the last time he was on the show. When are you going to have the Option Pit Asian Options Made Easy series?
Yeah, I mean, what you want me to do, like Korea call options and knockout options, things like that. If that's what you guys want, over-the-counter structured option products made easy. I'm done. You're done and done.
Well, there's a couple of different ways you can read that, right? You can think like Kospi or like Nikkei options, or you could think the actual Asian options, which are, of course, those average price kind of products, which never really trade. So I think they probably mean the latter, but you can go either way. Maybe you do a little Kospi webinar for those folks out there who want to sling some really, really low notional value products. All right, what else we got here? A lot of questions about ratio spreads here. Let's start with a basic one. They got kind of a couple related ones, so you can get to both of them. Doll Club first wants to know, how do you price ratio spreads? So if it's a long 1x2, just multiply the cost of the second leg by 2 and then subtract it from the long leg. Is it just that simple? Well, yeah, pretty much. We just talked about a ratio here today. Let's see if I could go back and find that exact example I don't have both legs written down here, but in general, yeah, the example you mentioned, buying one, selling two. That's usually the reason people buy one and sell two. They want to offset the cost, the outlay for that one long leg. So they come around and sell two, and look how surprisingly cheap things are when you sell two of them. Then, of course, you have all the risks we talked about before, the net short units, and all the other fun stuff that goes along with it. People start falling in love with it, and they go 1x3, and they go 1x4. And look, I'm getting a credit to buy this thing. How great is that? So it can be kind of a bit of a dark rabbit hole. But yes, the basic math is pretty much what you just laid out, and then you just adjust the math by the ratio. So it's 1x3, multiply by 3, subtract by 1, and from the price, and there you go. Speaking of ratios, DeJackal wants to know, Mark, they want to know, is there a good rule of thumb for when to use a ratio spread and how much of a ratio to use, 2x or 3x or more? Oh, you got a lot of questions here. Also, what is the best time or scenario for ratios? A lot to unpack there, Mr. Dagical, whatever your handle is here. So yeah, a lot to unpack here, Mark. Have you guys done a ratio spreads made easy, Mark?
We've not done ratio spreads made easy, but I love ratio spreads. They're a great trade if volatility is high and you can manage your deltas. I love them for kind of bear plays where I maybe want to take delivery of the stock at a really low price, or when vol is really high. They can be amazing. And typically, I like to get them done for a credit so that if they move the other way, I don't get beat. And I like to get and I don't like to do a lot more than 1x2. I just feel like, if you get a credit on a 1x2, that's plenty of leverage. You don't need any more, and it makes the math, and especially for like a retail customer, the math on a 1x2 is just really easy. Now, the other thing I'll do, and this is similar to a ratio spread, is a broken wing butterfly. And, the advantage of a broken wing butterfly is the amount of margin you save. And so for a retail-y customer, that is a great trade. And again, it's another one when vol is high and you think a stock could go the other way, but you want to have a nice cushion and you've got levels where you'd love to get involved with the stock. They're really pretty nice. But again, I don't like doing a lot more than 1x2. Mark, I don't know how you feel about the situation.
No, I think it's an old school kind of market maker, anti-net short units thing, I guess, beaten into our heads, at an early age. And so it's hard to overcome that later in life. So you start getting crazy with the ratios, 3x, 5x, and you're short so many units. It's kind of hard to look at that and not be like, oh, that's perhaps an issue. That's why I think the example you mentioned of the flying it off, broken wing or otherwise, that's usually how I go. I don't like, even I know, some people don't like to have the extra outlay to get that crazy wing. And if the things are lining up crazy, then, if you do, that's why you're doing the ratio to begin with. Usually the skew is going to be, let's say if you're buying one and selling two, the skew is going to be pretty high. So buying a farther out of the money one, that's hard to argue. And I understand all of that, but from a net short unit perspective, I like to be flat on that side. It's the best time or scenario we talked about before. Those times when those skews are kind of juicy is a good time to do that. I think the most common one I think we refer to, the most typical scenario we refer to on this network for ratio, which we haven't talked about in probably about a year, so that shows how things have been shaping up out there in VIX land, is actually that kind of reverse sell one, buy two type ratio that was the trade du jour in VIX land for the better part of about 2 years, until obviously VIX fell apart and not so much interest in that anymore. But that was kind of probably the more frequent one we saw for a long time. Other than that, it's usually pretty much when the skew is lining up. Is that when you usually do in your ratios as well, Mark?
Yeah, it's a skew trade. So high vol and high skew. I really don't like, I really do need kind of some souped up overall implied volatility for those to be interesting to me as well. I don't love them, even if skew steep in a like kind of a low vol environment. We saw what can happen in was it January where that group when was it that bull ratio group blew up?
And wasn't it the February 5th what they had like the one that didn't have like the 1/8 ratios on the other way the wrong way?
It was a bull 1/3 and they were doing it in the SPX and I think they blew out. And it might have been last year in that low vol bull run. And they must have not been managing their deltas properly.
I know there were the infamous examples back a couple months ago of the 1/8, which that didn't work out too well for them.
There's another stupid idea. Yeah, it's amazing how everybody wants to do ratios and the VIX is 11, but they're all terrified when the VIX is 40, and that's exactly when you should be doing them.
Everything is contrary at the end of the day. Yeah, so yeah, you get a little crazy with the ratios, as we saw from some funds recently who are no longer around, that maybe you want to keep your powder dry. You start getting to the 1/4, 1/5, 1/8 type ratios. Maybe you look at spreading some of that risk off a little bit more, so you don't go the way of the dodo on times like February 5th. Let's do one more. Actually, this gets points for originality. I don't think we've ever had this question before. Division 1 wants to know, why hasn't there? I think he means why hasn't there ever been a cool trading video game? Options or stocks, I don't care. Maybe Insider should do it. Yeah, there we go. I'm going to spin up my game development division. And it's a cool idea. I think for me personally, I think the reason why this stuff hasn't taken off, I think Lex mentioned at the top of the show, they have paper trading on their platform. Every big kind of platform has that now, which is kind of like the video game equivalent of trading. You're doing all the stuff that trading is, just with fake money, right? So you get to see all the stuff, the deep liquid markets, all the platforms, all the tools, all the spreads, and then I guess the analog to that would be like maybe you manage a prop trading group, and so you have some fake money and some fake markets, and you throw some shocks at them, and then all of a sudden you manage your prop desk and you're 1/8 and you blow out on February 5th. That could be interesting. I don't know if there's a lot of demand for playing at trading when you're not actually doing it. I don't know, Mark. You think there's some rubber meat in the road here?
I mean, I believe there is a game for the NES that was
that old, really?
Yeah, a stock trading game, and it was a spectacular and monumental piece of crud. Here's my question: would you rather spend I get paper trading for free, or I can spend $50 on a video game about trading instead of spending $50 on Breath of the Wild? I think there's your main reason. Would I rather play Zelda Breath of the Wild or the Legend of Zelda long-term stock market investor?
Long-term Coca-Cola buy and hold investor. Doesn't have the same ring to it.
Exactly.
I do have to try that Zelda.
Ganon is a bear market in that game.
You've been raving about that Zelda. I'll have to try that one of these.
Oh, Breath of the Wild's awesome.
There you go. Ringing endorsement here on our video game review section of the Odd Block. Yeah, I think that's it. I think people are, they're fun time. They want to do something other stuff. They've been maybe trading all day, or they're paying attention to the markets. If they are gonna do this quote unquote game trading, it's going to be in paper trading, where they're probably going to learn something. But maybe there's something to running a prop desk game. I don't know. Interesting idea. Certainly points for originality. No one's ever asked us that before, Mr. or Mrs. D1. All right, we got to keep on rolling to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, where we talk about what we're watching for the rest of this week into the old weekend. A lot of things are popping off this week. We had a little more of the this and he said, she said on the trade war side, gave us a little bit of vol, then vol came off, and it came back today with this kind of weird, mixed, bifurcated market that we had today. So all that to lead up to say, Mr. Meatball, what are you watching for the rest of this week into the weekend, sir?
Well, here's what I'm going to say is, Facebook has basically made every PR blunder the last couple of days the last couple of weeks. First, they gave data to the Trump campaign. Now they gave data to the Chinese. All they need to do is give data to the Russians.
It is pretty impressive, the list of failures they've had recently.
Hit the trifecta. And, so it was pretty fascinating. So Facebook's an interesting one. I'm really watching the NASDAQ. I'm watching the S&P, or the Russell 2000, which has been another super hot one. And then I'm watching this VIX. Are we going to get an 11 settle for the week? Where are we going to end up? And if we do get there, if we get to that nice 11.5 level, I'll be a happy camper.
I would not be too upset at that either. I think it's a little bit below my vol views prognostication, but there are worse things in the life. All right, listeners, that music means we've come to the end of another epic journey through the world of options. Let me start by thanking our guest, Mr. Lex, over there. Check him out at mytradehawk.com to learn more. Get that guided tour he offered you. Why not? Let him help you kick the tires and light the fires for what he terms the Netflix for option traders. You go over there, one price, one size fits all, and you trade away. So go for it, mytradehawk.com. Give him a follow over there on Twitter as well. While you're going to websites, head on over to St. Charles Wealth Management. Search for that in there. Find Uncle Mike's new site. Tell him what you think about it. He's very self-conscious about the design. He wants input. He wants feedback. Do you like the Fox? Do you like the Fox? Hit him up. Let him know. He wants to know. While you're there, maybe you hit him up about some other stuff there, too. And last but not least, Mr. Meatball, what's cooking in the Made Easy series, sir?
Well, we're going to be doing a directional trading Made Easy series coming up. So that'll be lots of fun. And then after that, we're going to do a whole series of options Made Easy, which will be even better. But go to optionpit.com for information on everything we are doing, and you can read our blog and see all sorts of fun stuff there.
There you go, optionpit.com. But what fun is directional trading? I mean, it just goes up, Mark. There's nothing to it, really, right? You just buy it and it goes up.
This is America. Stocks go up.
There you go. I mean, it works for Buffett. Why wouldn't it work for me? Optionpit.com. Maybe you learn why over there. And on behalf of the Meatball and Uncle Mike, who couldn't join us today, and indeed Lex and myself, I thank all of you out there for downloading, streaming, subscribing, sending in questions, and some good ones today, and all the fun stuff you guys do. And we'll see you back here tomorrow for Vol Views and Twifo, and back next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.